Greetings, Jedi traders. David here of TradingFibs.com to bring you the market outlook and recap for the end of the first week of March, March 4th, 2016. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market. See what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Well, leaving you off last week with decision time, end of the month trading. As we got into Monday, thinking last day of the month we might go green. Well, didn't exactly turn out that way. It was more so the end of the last week of February that turned out. Contract rollover coming up, key week, price and key moving averages, open gaps above and below, FOMC meeting approaching enough to keep that list going. Can almost make your head spin, as I left you that last week. Hey, market had a 50-50 chance of going in either direction, leaving the bias at the door, trading the charts in front of you. Last week, I looked at the outlook as overall technical momentum was leading into week was bullish. Support to see below at the 50 EMAs held on the 4-hour charts. We'll take a look at that today. Looking at crude, we talked about gaps above and below, but still the big picture is still bearish. But talking of production cuts or who knows, manipulation in the market. But with price crossing over the 51.44 EMA with this trend still in the red was the key chart to watch, and crude just ran it up this weekend to some key levels. Index ETFs, just like the futures, at key levels of resistance, watching the 4-hour charts for significant resistance. I wanted to look for pullbacks with the highest probability of continued trend. And so combining with fundamentals and what you believe to be a price value based on your own criteria, was watching for at least the technical cross of the T3 moving averages on a higher time frame, and especially the 4-hour chart. And we'll talk about the intraday setup that supports the big move. So whether you go short or long in this market, is always waiting for the highest probability when all charts in sync. So let's jump right into the market. Let's take a look at the volume profile for the market indices. We can see here the 4 markets, TF, NQ, YM, and ES. Finishing off with the crude here. It was all upside. Again, end of the month trading. I thought, hey, maybe last day of the month we might go green here, but it was pretty much a low volume intraday inside day session, creating somewhat of a weak profile for the day on most of the indices here. But then it was just rally up, up, up. And key notes on the volume profile charts is always noting where the 600-day major VPOC is. 1140.3 here on the Russell. YM upside right now at 17,634 as this rally continues upside. NQ, we have a 600-day VPOC up here at 2075. 4264 on the NQ, and crude with a 600-day VPOC up ahead at 5136. A sort of magnet migration, again, like daily gaps, open gaps. Price action tends at some point to come back down and repair, moves back upside. We know markets move in both directions, so keep an eye out every day as we have an intraday setup. You have a momentum move that, hey, you know what, the VPOC might just be the end of the day, might be the final target, as we could see here. ES running up yesterday, returning to the midnight open, as shared by some of our fellow trading room member. And but look at that, right? Just almost. Sometimes it's just a little tick shy to close out that VPOC. But right there, 2007.75 was the VPOC. I think we came within 1 or 2 ticks of it. But coming right back into value area. Again, nice profile, finishing up the session on Friday, both on the ES and the YM here. A little bit weak on the TF to the downside, as well as the profile and the NQ you can see here was very nice as we continue to rally upside. All right, let's jump in. And again, as I remind you each week, guys, why do I pick volume profile? Especially because it tells me how much action was actually happening at the price versus time. That is a much better indicator of where are there more buyers or sellers at a certain given price, 70% of all the day's action represented within the orange zone. Again, if you want to read up more on volume profile, I recommend Dalton or Stoudemire, and then you could read the CME. He's got some great information out there on volume profile. Let's jump into the market profile. Let's start out with the crude. Again, weekly opening price here on the crude here at 33.31 with a run up all the way to close out 36.31. What a week we had, leaving no major open gaps. So that's a good sign. We actually closed this gap out. So every day we represent that by a dashed line. So this is what I like to see. This is power. This is price action taking care of yesterday's business and moving up. So from the weekly opening price, 33.31, we closed out every single gap to the upside, leaving us now at 36.31 up here. Moving into the TF Russell with an opening weekly price at 1035.2 with a run up to 1080. Nice week we had there. Again, same picture, closing out open gaps every day. That's taking care of yesterday's business and moving upside. And again, this is regular trading hours. Since most of the volume is in that market, that's where I pay attention to open gaps and daily gaps. Not interested in 24-hour Globex trading to see if we close those out. Because eventually market, as you will see here on one of our indices especially, ran up to close that gap here on the TF Russell this last week, and that was the end of the line just about. So there it is, TF Russell to the upside, taking care of business. Now, do we have action back to the downside? Sure, at some point we will. We have all these open gaps once again. We know this to be the first week of March. It was a total rally this week, and eventually market will come back down. When it comes back down, it comes back down. I can't tell you that it will come down this week. I can't tell you it can come down in 2 weeks. It might take a year. But for right now, we definitely in a rally. YM opening weekly price here at 16,608 with a run up here to 16,965. Again, YM doing a fantastic job. Each day we did start out that Monday with some low volume here, just pretty much inside session. Tuesday, Wednesday didn't go very far, made Wednesday trading a little bit challenging. Thursday and then Friday session ending a little bit strong here as we ran it up and came back to inside value area. Again, that's something I wanted to mention. I do mention each week, but volume profile, again, when price action does run up, let me go back to that volume profile for a second just to relay how intraday trending, when price action pushes outside that volume area, that 70% area, the value area low to the value area high with the forming point of control, the outlier, the price action above, price action tends to regress back into value area, and that's something to pay note to each day. All right, so anyway, back into market profile as we've seen here, crude on a run up, TF on a run up, YM here on a run up, taking care of business every day, closing out daily gaps. Again, here we are on the NQ showing very similar price action. Weekly opening price here at 42.30.25 with a run up to 43.22.75. Price action closing out here. So a nice run up, taking care of daily gaps every day, even the ones up above. We tried to push even higher. What a day we had on Wednesday, and pretty much, I'm sorry about that, Tuesday and then Wednesday, Thursday, pretty much sideways days. A little frustrating, but finding pockets of opportunities. And then Friday, amazing run up to the upside, and then right back down to the downside. And by the way, that was the trading session for the week. As each week, I do a recap here. You want to make sure you check these out. Here we are in week 9. The NQ will be trading the TF in the live trading room next week. Trading session focus on the NQ is a blog where I go ahead and I post the charts that have been posted throughout the week on social media with a little bit of a blurb to, key you in to review. Like any good trading is going over the trading day and the trading week to see where did you go right, where did you go wrong, taking your licks to make your ticks. Not every day is always a winner. There's some days where you got to take a couple losers. Well, you don't have to, but you take a loss and you say, all right, I'm going to come back from that. I'm going to bounce. And so the thinking process, a good way to go back and journal your intraday setups. All right, let's jump right back in again. So it was all about the NQ this week in the live trading room. Again, watching the other indices, but it was all focused here. And so Tuesday, amazing day, great run up. Show you one of those great trades this week. And then Friday, an amazing run up to the upside, and then back inside value. All right, let's take a look at the ES. 1944.75 was the run up to 1944.50. What a good week. Again, I love the fact that we closed out all the open gaps as market action ran upside. All right, so that's the week in the past here. So let's take a look at where we are right now and where possibly we might be headed. Again, I never know. It's simply trading the charts in front of you. But technical momentum is a clear picture. I told you just a little bit here a while ago when I started this that we have a technical big picture on the crude to the downside, and we still do, especially on a monthly here. And the daily charts up here in the upper right hand corner still in a bearish stance. Weekly charts here down here at the bottom. Actually need to change this. I apologize. This here is should be a 7-day chart. So let's go ahead and change that. All right, looks a little bit better. All right, so there we are on the weekly and the monthly. We are still downside. The bearish picture here. Definitely need to break above this Kiwi trailing stop, but we have broken above the 5 SMA. Monthly is still downside. Daily is just starting to migrate, but it's the short-term picture. Why wait on a daily to get all the way back upside in the green? You'll miss the opportunity. So this is where I use the 75-tick chart, the 4-hour chart on a T3 moving average. You can see here price action for the week, and it's my favorite 4-hour 240-minute chart there with the 51.44 to the upside, breaking upside and holding upside. So again, crude all to the upside. Let's take a look at the Fibonacci. Where is the outlook for the week? Well, again, like I said, price action is on any given day is moved by momentum, volume, and price action here on the crude. Obviously in a rally this last week, where might it head? Well, we have upside. We have a wonderful open gap here from back in the beginning of January. We broke the 50-period moving average on a Fibonacci retracement. We're working our way up to 38, 50%, and all the way up to 61.8. We definitely break that 61.8 up here to 48.72. We might go tag the 200-period moving average. Obviously, that would migrate over time. But again, we have another open gap all the way up there at 50.84. So open gaps to the upside. Again, daily gaps versus open gaps. Open gaps where price action simply left a hole there in regular trading hours, and we do. The market does take care of that business. Here you can see back in January, price action breaks up, closes that gap, and then bang, right back up to the upside. So again, firm believer in closing out those gaps eventually, whether we do it now or not. That's all based on the intraday. Again, what did I say? Go look at your swing size position. Look at the 240-minute chart here on a 51.44. And then, obviously, with the intraday setup, which I'll show you here in a little bit, price action puts you into the long. And so you've belted above the key resistance here at the 50 over several days, broke to the upside. So, hey, formidable level that we might be headed to is the 38.81. Definite target to be watching for. Perhaps resistance. Hey, whatever the market wants to do, that's what it will do. Taking a look at the long-term TF, again, all in the green, rally week, price action on all the main charts here on the left. This is my short-term charts, 50-tick chart with a 4-hour chart, T3 moving average. Again, my 4-hour 51.44. We found resistance back here on February 24th, and it's been all upside rally. Again, if we are to start to pull back, I will watch for that 1050.6 as if price action does continue back upside next week and this 50 moves upside, I will look for that for support. Again, the big picture daily still trying to push back upwards. T3 moving averages have a little bit to cross over there, but it's the volatility on the daily. I don't know why my charts are all here on a 1 day. I got to fix that for you here. There we go, 7 days. There we go, a little bit different picture. Volatility daily, volatility. Here we have the volatility on a weekly chart down here. As we can see, price action just starting to migrate upwards. Actually, I truly apologize. I really did mess this up. I changed my charts around this last week. So it is a one day as the price. There we go. The two bars together. Let's go back. Silly me. All right, hang on a second. Let's get this right. I did have that. All right, so there it is. Move my charts around a little bit this week. So it's the daily here, and it's the weekly over here on the right-hand side. So we can see the weekly and the daily in conjunction. We can see the daily on the crude already pushing up to the 5 SMA. So crude, at least on a daily here, breaking above the T3 moving average, showing signs of a rally as well. All right, let's jump right back to the TF, having my charts correct. Here we are, daily price action breaking back up above the T3 moving average, upside here, and on the weekly again, also coming back upside. Here's our monthly chart, still downside on the TF Russell, but it's the short term and the 4-hour chart that assists me as another indicator, another market internal that the TF Russell is holding up upside. Again, what would I look for if a pullback occurs? I'll watch the 50 period moving average on an intraday basis. I'll watch the 144 as time and time again the market does find either resistance and comes back down, or it finds support and pushes back upwards. So something to keep in mind. Taking a look at the Fibonacci charts, we can see price action here from the drawdown. Again, we have a 200 period moving average up here at 1145.4. But as I said before, these open gaps versus daily gaps, very different. Again, daily gaps is something I look at here on the market profile just as a means of saying, hey, you know what? Market's in a rally. It's closing out each day's daily gaps. That's pretty strong. When I look at the long term, when I look at the daily chart and see that these open gaps, there it is, 1083.8. Whoever knew from the beginning of the week that what? That's right, price action 1, 2, 3, 4, 5. Price action broke to the upside, and right there was the open gap back from January, similar to that crude. And what did it do? Closed it out. Yeah, went a couple ticks above. Nothing wrong with that. And obviously settled below it. But right now, we can go ahead and say, yeah, we've taken care of business, close out that gap, and we move forward. And next open upside will be price action to break the trend here at 61.8. Again, 50 period moving average down here on the daily picture. Again, I can't tell you guys where we're headed next week. Everybody, all the gurus out there, you get a 50-50 shot. Some will say it's up, some will say it's down. And in the end, someone got it right. The others are tucking their heads in the ground like an ostrich because they didn't get it right. So I'm not going to tell you that we're headed up. I'm not going to tell you that we're headed down. All I'm going to tell you is that we're headed down on an intraday basis. Then you take the entry. But the big picture is definitely, if supported by the 4-hour chart and the T3 moving averages on the 51.44, and we're headed upside, what do I have up ahead that I need to keep in mind of? And as long as we continue to hold above these key levels, hey, there's a next level above that I think the majority of the market, at least technical traders, will be looking at. Again, we'll be looking at the TF Russell coming into next week's session. All right, long-term YM, same picture. Found support at the 50 period moving average. T3 moving averages on the 50 tick Flex Renko chart, all upside here. A little bit of chop action midweek as we saw that Wednesday, Thursday session, but then finishing strong on Friday. And then obviously on the daily chart back here on a volatility, we definitely been up in the green here for some time as the T3, as the price action has been breaking upside here on the daily as well. Watching the T310, also a key indicator here. Weekly, we're still downside. Monthly, we still definitely have room to get back upside, but it's the short term that helps me with the intraday setup. Here we are on the YM as price action, taking care of business to the upside, and that's right. Okay, back here, price action, we still do have open gaps. Here we could see an open gap here back from February 17th, 18th. Price action came back down, closed that out. And as we move upside, we definitely broke the 61.8%, showing us a trend change here on the YM. But it was the 200 period moving average that the YM was able to come up to this last week. But price action on these daily gaps also being taken care of, which is exciting to see as well. So as long as if we break this 200 period moving average, you know this to be institutional buying. We might find support, and we'll draw at least, I think, the next line up here would it be at least around the close, somewhere around here, around 17,298, 17,300 would be the next level up that I'd be watching for. Again, whether or not the daily picture is in the red or in the green, it's the intraday setup that I'm interested. For the options traders and for the ETFs, I always recommend that they watch the swing position or the 240-minute chart to put them in the trade. Daily picture, obviously, we just, where are we on the bigger picture? Unfortunately, we're still to the downside. All right, it was all about the NQ this week in the trading room. Price action finding support there at the 50, bang, right to the upside. Again, if you're trading the ETF, the option, I would have said, like I did last week, looking for the green, but prefer a pullback. And we did get a pullback midweek and back to the upside. As long as we found support and we're moving upside in intraday, move this market. We know the daily to be back in an upswing. The weekly still trying to get back upside, and the monthly picture as well. Where are we at right now? On the NQ, we obviously have open gaps up ahead. We're headed towards that 61.8. Right up ahead is the 200 period moving average. We broke through that 50 period moving average. A little bit of resistance there for a couple days. Unfortunately, we do still have an open gap below, and the NQ, guys, I know you're not going to want to hear this, but we are going to come back down and close that at some given point, whether that happens now or later in the year. But watch that intraday. As soon as the intraday starts to go short, watch for the 50 period moving average for support. Also, you want to watch the 4-hour chart. That would be my first chart I would look for as this moves up. 42.76 obviously will change during the over Globex section and intraday. 42.12, and then you watch down here as well for the 50 period moving average on the daily chart. Open gaps up ahead. If we at least migrate up here to that 200 period moving average around that 61.8, we'll definitely take care of business here upside next week. I want to jump right in for a second before I go to the ES. And again, combining, that's right, when we talk about combining the intraday setup. So as we saw the break upside above the 50 period moving average, and we do have a rally up here, 75 tick chart. We see the 4-hour chart. We see that, and specifically, I like to put a lot of a lot of credence in this chart in the lower left-hand corner. If I find support at the 50, and the market actions in the green, it's the intraday setup like we had here midweek as price action. You have all 4 charts of the green. Again, a different setup, 534 chart. I have a T3 moving chart on a higher time frame, but it's the 5144 down here at the bottom, but on a 1-minute chart, puts you into the setup to the long. Now, we're always looking for a gold standard setup. If we're at a key level, I might not take it. It's the Fibonacci bars, but the big picture here is that regardless if the daily picture was downside, on an intraday basis, if you have a momentum trade and there's a lot of volume, you want to be in it. And whether you get stopped out and re-enter, you're able to ride this all the way up like we sometimes do. That's the whole picture of intraday setups, and to be able to be, as some would mock, but like a long-term intraday trader. A lot of traders out there just trying to get maybe a point or two. We're looking for 20 ticks, 30 ticks, maybe 100 tick runs. You have to be more patient. So again, trading the NQ, one of the highlights. Again, you can always go back to the trading session focus and see some of the other trades. But again, one of the best trades of the week that we had here on the NQ. All right, let's wrap up with the ES here. And again, by the way, before I get to the ES, again, I want to talk about, when we talk about intraday setups, we're also looking at projection levels based on yesterday's high to low and the midnight open. One of the additional features we use in the live trading room is a target high and a target low. And again, if you have a setup that, like I just showed you here, where price action is running up, and again, on any particular day, I think it was one of the last posts, there we go, from price action from one fib projection level to another. Again, intraday setup, very nice move from the lows all the way to the highs. Obviously, price action retraced all the way back down. But again, it's using that fib projection level that you see here together with the intraday setup, together with the big picture, not the big picture. When I talk about big picture, what I'm talking about is these charts here on the left-hand side for the intraday trader, or whether you're the options or ETF, same thing, but using these projection levels as a target, which we tend to do quite well on any given trading session. Now, does that mean that the price action doesn't run above that? No, but at least for those traders that like to trade with some kind of target, that is one of the additional features of being in the trading room. All right. Last thing is I want to go over the ES for next week. Again, where are we currently? Price action finding support here at the 144 and the 50. The 100-tick range chart, the 4-hour chart, all in the green, very strong. Monthly, unfortunately, still downside, but daily chart showing upside action. Weekly starting to turn here, but it's the looking at the daily picture with the fib draw. There it was, 200 period moving average. Bang, right to the dot. Broke the 50%, broke some key levels. That 1970-50 right there, we broke on, that was Tuesday. All right, broke that. When I say broke that, I mean we closed that gap out. All right, price action downside. Everybody's saying price action is going to keep coming down. And then what do? We finally bounce back up. That's right. Now, does that mean it's the only thing that it closed out? No, I'm sure on everybody's chart there was some level or line there, but that was a formidable line that we closed out. And do we have some more upside? Sure we do. And that might be the final target, 23.50 on Monday. I don't know. All I can tell you is if the intraday setup is like what I just showed you here on the NQ, all right, I might have a line there on my chart just to at least identify the fact that I have a level up above that eventually will be closed out, and maybe decide to take a contract off there or terminate the trade. That's all I use it for in the end. But if price action is able to support, hold up above this 50 as we found support here. Again, the market's been talking about a range here between this 1994 and 2000. We definitely broke that 2000 once again, but it was 200 period moving average, institutional buying up there. And hey, intraday setup next week. Look for all 4 charts in the green. If we're going up, if we're coming back down, you want to make sure you watch for the 50 period moving average down below at 1925. But I would first watch for the 4-hour 1964 for support, as we have numerous times before, and then all the way down at least to 1932. But again, this chart will change during the week. All right, looking ahead next week. Again, we've talked about contract rollover. That's obviously FOMC minutes coming up, but on the econ calendar, any red stars you always want to pay attention to. Crude obviously is in our sights. We know where crude is. We have jobless claims, natural gas report, but really as the big highlight of this week will be Thursday, as many trading platforms will change over to the next month, so be very careful. Friday, again, if you're already on the next month's contract, the volume will still be on Friday session. In the March contract, hey, take the day off, or at least just be a little bit more careful. Once we get into next week, volume should return into the new contract. As always, please make sure you check out my blog each week, Futures, ETFs, and Market Cap Leaders. Besides the Market Cap focus for the week, in Futures ETFs, what I do is go ahead and load the video that you're watching now. But one new thing we'll be starting this week is a work in progress till we get a polished product, but it's looking at the ETFs and looking at the market cap leaders in a newsletter. Will be free. I'll send that out. You guys can check that out. And we'll be doing that weekly to give you kind of also the big picture on the majority of the key ETF industries, as well as the ETFs that are associated with the futures, and also the top market cap leaders. So excited to be getting that out this week as well. All right, that concludes an insight into the state of the indices and We'll talk about the ETFs and the market cap leaders in this week's newsletter. Feel free to stop by at Trading Fibs or any of my social media outlets to obtain more information. My trading mantra of one simple strategy, any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at Trading Fibs, and as always, I leave the crystal ball to the experts. I only trade what's in front of me and on my charts, and as always, leave your bias at the door. When trading, only trade the charts that are in front of you. Have yourselves a Blue Zone day, a Blue Zone weekend. Good day, good night, and good trading.